what are you making of this entire Trump tariff tirade that we're seeing right now? Because, one day you have tariffs, the other day they're receded back, and the impact that it has on global markets and our market back home as well. What should an investor's strategy be, and how should you be positioning yourself in a market like this so as to be able to absorb these shocks without much impact to the portfolio?
Sure. So, see, one thing is very clear, that we are in uncertain times, and what is the degree of uncertainty, that is what keeps on changing on a daily basis. Having said that, what happened over the last 2 days is that once this 90-day deferment, people now know what the worst case scenario is as to what is going to be the tariff, except for what is going to happen on China. Now, it is very clear that whatever Trump has announced, the eventual tariff is going to be same or lower than that, unless there is something which is a trade war kind of thing which can happen with China. The ex of China, we now know what the worst case scenario is, and things can only be better or same as when they were. So keeping that in mind, there is some clarity, and that is the reason what we see is a relief rally, or whatever you can say, short covering or technical factors behind this rally. Now, since the outcome is not as bad as feared, there could be some buying also which can come in. But at the same time, the overall uncertainty remains, because China is the largest trade partner of US, where there's still a very high tariff, and there's also a retaliation tariff from both China and US, and that is obviously going to lead to inflation in US, and how they're going to handle is something that people are still unsure about. So keeping this in background, and keeping that the economic activity in US is also slowing down because of this uncertainty and the, you can say, looming inflation coming in, we suggest that anybody looking to invest into India or overall into equity markets should not come in right away. They should stagger it over the next 2 to 3 months. So come in, but only with a portion of your investment that you want to do, and do it over the next 3 months. I'm not advocating a 12-month or a 20-month SIP kind of a model, but over the next 3 months, whatever needs to happen and the new reset that needs to happen on the global trade would be there. And there could be volatility. Because of that, one can take advantage of that volatility and place the trades or the investments in a staggered 3-month period.